What's up, crypto universe? Hey boys and girls, this is your friendly neighborhood crypto guys from Rock the Block Live. My name is Eugene Tay.
My name is Radical Rock.
My name is Malcolm.
Okay, so today we have a very important topic to review. Okay, I think one of the hottest topic that came out of all the events that we attended last week is ICO dead? What's STO, etc., etc. And I think for a lot of people, including regulators themselves, STO or security token offering is a mysterious place, and it's almost just something that everyone's trying to jump on board to because ICO seems to be dead. Now, whether ICO is dead, whether STO is the next big thing, that's what we're going to discuss today, and we want you guys to participate in this. Leave your comments, engage with us. We want to know what you think, because today's topic, there is really no way to say who's right and who's wrong. The future is yet to be seen, but we want your wisdom. We want you to collaborate with us, contribute your opinions and your ideas, because I don't think the three of us will be 100% right. But what we can share with you is our innermost thoughts and feelings, our opinions based on what we see in the market, our understanding of the market, and that's something for us to discuss here and for you to think about. Okay, so let's start the discussion today. Radical Rock is our new co-host for this review, and Radical Rock, if you have seen our previous video that we did, Radical Rock represents the company Radical Finance, and these are the guys that really deep dive, deconstruct heavy research material for the industry, and I think you almost did it really out of from a pressing need, because you saw the community needed that kind of information. So that's why Radical Finance came about. For us, Malcolm and myself, if you have been a fan of the show, you know what we always talk about. We like to do a versus mode, and we do drinks on the show, because for new fans who just joined us, what Rock the Block review is about, it's not so much of just a fuddy-duddy old man sitting here telling you what you need to think, but rather it's going to be an environment like three guys at a bar having a drink and having a discussion,
having a conversation with each other about in-depth stuff. It's quite funny because when I'm high, I feel like I can talk about more in-depth stuff better. So I think that's very interesting as well. Some people have different reactions when they're high, and I guess for me, I just become more articulate for some reason.
So cool, right? So what we want you to do, if you're watching this, go on to the kitchen, grab a drink, pause this video, and join us, because the three words of the day are regulations, liquidity, and investors. So when these three words pop up in our discussion, we all drink. Got it?
Yeah.
So that's the rules of the game. So to start off the conversation, let's first look at how STO came about, or security token offering. Anybody want to take this?
Yeah, so for STOs, it's, these days when people talk about ICOs are dead, it's because they realize that the utility model wasn't working out so well in terms of, for investors, there's no way to kind of like safely say that this investment will be good, because it's not pegged to anything. It's not actually pegged to companies' equities or any of their fund rate or any of their kind of like activities. So utility token was just a way for companies like ICOs to actually sell an idea, something that is very intangible. And the only way it gains value is that if it's traded on the open market and people there's high velocity on the market and people are buying and selling because they think the company is good, and that's why the coin goes up. But if the company actually makes real money and becomes a real big boy out there, does it really mean your token value will be high? Actually, it doesn't, because there is actually no pegged asset to those tokens. So STO is like the holy grail, a mix of very strong backing from the old school people, as well as still utilizing blockchain and a kind of like crowdfunding methodologies and mechanisms that we are very familiar with. The only problem is STOs are, they are like IPOs in disguise. They are a better version of IPOs in my opinions, because they allow you to reach a wider market. In IPOs, if you're a listed company, usually your people who can buy your stuff, right, like your stocks and stuff, is limited to maybe people from certain countries or the regions that your company is at. But with STOs, you can sell tokens to anybody anywhere in the world. But of course, the problem comes with all the different kind of regulations. Cheers. And stuff you have to comply to. It's very stringent, just like the IPO process. And basically, if you are not accredited investor, which means that you have like something like $1-2 million worth of revenue per year or assets, you're not able to participate in any of these STOs, which kind of goes against the grains of what crypto is all about.
Before we get into the nitty-gritty details of STO or security token offering, so that is the overview of what a security token offering is, which came about because, as you mentioned, there was a utility play in the market, which was basically the ICO, the initial coin offering. That was such a buzzword of the 2017 and 2018. Now, Radical Rob, what is, in your opinion, could you give us some insights into ICO?
Okay, actually, the Radical Finance team did an issue on STO back in October. So we did a lot of research on why there is a STO and is really ICO not working. And we attended an event in SGX, and CZ was one of the panelists. He did say this in the panel is ICO is not going to die, and ICO actually increase the number of success startups compared to the success rate in the past. Although, yes, success rate is still 10% or less, but you look at the number of startups after they got into ICO, actually the number of startups that are successful are more in numbers. So actually, he is supportive of ICO. But how can we fundraise in a more legitimate way? That is the question. Yeah. How should we get the funds from the investors and properly return them the investment when we got our business up and going? This is important.
Correct. Because to add on to what you mentioned about ICO, so the reason why people were building smart contracts on blockchain is mainly to raise funds to fund innovation. And when I look at it from that angle, funding innovation is really an important thing, because there's a lot of great ideas out there in the market, as we have seen with Indiegogo, Kickstarter. Those are fundraising sites, right? But they really give voice and the possibility for small businesses to experiment with ideas, to go out there in the market and build something. So on its own, the initial idea of an ICO was really, really good. However, with any situation where there's opportunity to make money, you're going to find greed. Greed will be there, and bad players will be there. So on one hand, you have people who just try to make fast money overnight. On the other hand, you have scammers who will go there and give you the false promises with trying to appeal to your greed. And that's where 90% of the population in crypto gets burned. And when that happens and people lose money, the governments and the regulations are forced to come in to protect investors.
Because as an ICO investor, you actually can't hold any of the companies you invested in accountable. So if they choose to stop working, or they choose to dilly-dally and basically waste time and not focus on the things that they said they are going to focus on, there's nothing there's nothing you can do about it.
But I think that itself is not so much the critical decision why rules will have to be put in to govern that. I think one of the most painful part about these various ICOs is the fact that they are raising money through very dubious means, not being very clear on what they're trying to raise it for. And some of these scam companies are just raising for other businesses that they have to grow their business, and you as a token holder, because it's a utility token, there is no ownership on the assets or the profit. You're just literally giving them money to do business. And then
you're taking a very big bet on them, but you have nothing to. You can't actually hold it against them to say, hey, I'm an investor, can you please get your shit together?
So people like the idea of being able to so freely invest in something, but at the same time They like the idea of being protected as well. So that's where STO come in, because security token offering follows the rules and regulations of SEC laws, and SEC laws are really put into place. As much as you hate SEC or authority, they were put into place because there were bad actors from way before 1920. We have the stock market, bad players. We have anytime there's business coming in, a new idea coming in, when there's money involved, people usually get burnt. So what happened in 2017 and 2018 was not really unique to just crypto.
I think it's just a cycle.
Yeah, but laws were put into place to protect us. So there's a reason why SEC and the players like that are really taking a strong stance to cryptocurrency. But yet, at the same time, you begin to appreciate the way SEC is moving very slowly, because they have to move very slowly and they have to be very careful. But at the same time, you also can appreciate, like what you said, a lot of innovations were flying off the shelf last year, coming to the market. Yeah, no doubt, even only 10% of all the projects have succeeded. That is 10% more than really what the world have ever seen. If you're trying to go back in, if you're trying to force us back into the mold of, do your paperwork, get accredited, and only certain investors are allowed to play, then the barrier to get into the startup field is going to be extremely high, and it's going to be just relegated to a very small group.
Yeah, it's like, the Silicon Valley, where all the startups come from. You as a normal person, let's say for me, I'm in Singapore, I have no opportunity to actually be part of projects that I see on Shark Tank or interesting projects that I see coming out of Silicon Valley. We have no chance of being part of that. ICO to me was, when it came out, the idea of it was so beautiful because it allowed normal people like you and me to really be part of a startup, of a company that you believe in, and you can be part of their growth, part of an ecosystem that actually grows something that you believe in. Whereas for a lot of the Silicon Valley startups, they're all basically monopolized by the big boys.
All the VCs, the hedge funds.
Yeah, so you and I have no part in it. We are just bystanders. So ICO was like, open the floodgates. Now we all can come in. We are all investors. We are all awesome.
It's a chance. It was a chance to own something.
Chance, yeah. It was interesting. It was very fun. And then you think about it, oh wow, no, I own part of this company, and this company is so successful. And I was one of the early backers, and you feel like, wow, no, that's a real awesomeness in that.
So the real question now that we have, Radical Rob, is we know the reason why ICO has failed. Whether ICO has died or not, I think my personal take is it isn't going to die away, but the old way of doing ICO is so toxic that no one's going to touch it anymore. We will see a evolution of the ICO engine.
For sure.
Now, the real question that we're talking about today is the STO versus ICO. The talk in town is that STO will replace ICO. And you have done thorough research on this, and you have walked away with some really valuable insights. Can you share that with us?
Yes, sure. Actually, let's look at this fundraising in a very simple way. So there's two group of companies trying to raise capital. One is a established company, so they go through the means of IPO, getting their company, their assets underwritten, a value on the company, and they go listing on the SGX in Singapore, for example. Then there's another group of new startups who don't have history in the business, and they are also guys with good ideas, good innovation, good technology, who wants to do something that successful for the industry and also for their dreams. So for this group of companies, new startups, how can we help them in raising their capital? This is the question. So are we giving them the liberty of the Wild West ICO kind of means to raise 30 or 300 million?
And they buy Lamborghinis the next day.
Yeah, because I have reviewed on a lot of projects. A lot of projects, actually, they are good projects, and founders are also very hardworking, legit, they have great dreams. But after having the tons of money, probably, the devil in the mind convince them to do something else, or to slow down and think of something that is not as tough as running a startup. Probably they should invest in something that have better returns.
Like for example, like some chains who've raised so much money, instead of making their chains better, they just use that money and convince smaller players to use their chain. So is it because the adoption of the chain is it because the chain is very good, or is it because they've been throwing money at people to make the problem go away and make the problem easier for them to solve? I think that's where the killer of innovation comes in, when you're too comfortable, when you feel that you are able to convince people through other means instead of the real innovation, then you're basically just falsifying the awesomeness of your product.
Correct.
Yeah.
So, okay, back to these two group of companies. So of course, established company, they have more assets, they have more liability, they have more staff, they have more manpower. Naturally, they need more money. They're raising more money through IPO. But for new startups, they should be lean. They should be new guys, young people with great ideas. And I don't believe we should be giving them that much of money, like 100 millions or 50 million to do a startup. And actually, we should actually follow that roadmap very closely and distribute funds to them in tranches instead of just
instead of just one shot, and then you just pray for the best and hope they actually fulfill their roadmap, right? Like there's like goals, like stretch goals that you have to reach in order for you to get access to the new portion of the funds.
So instead of depending entirely on STO, which is a very old school IPO style of doing things, are we saying here that we should be looking at reinventing ICO now? Putting more rules in place without having regulators come down and tell us how to run our business based on very old school and archaic rules.
Because the problem is, when you follow too closely to the IPO STO style, you're actually excluding a lot of people who only managed to come into this space because it was so free. You know, like for example, being a accredited investor, you know, it's extremely tough, and I would estimate that, you know, less than 10% of crypto investors are actually at that level of accreditation. A lot of us are just, you know, normal guys on the street, just trying our luck and you know, being part of this process, right? But we're not real big boys, we're not whales, we're not like high flyers, we're just a normal guy. And to me, that is the whole point of crowdfunding, right?
The whole point of the blockchain, the philosophy is financial inclusion, right? So everyone gets a chance to partake in all these various instruments that allow you to make money. Because traditionally, you will only get a very small group of elites or the accredited investors who have the access to all these financial instruments.
It's equities, like how do you buy equities if you're a normal guy? You know, it's very hard for you to actually not only find the deals, you know, but how do you actually do the paperwork and do the investment? It's very tough. You know, so the whole idea to me is that although STO gives you a little bit more of a guarantee in terms of like, you know, you really have this asset and it's really backed by something from the company, be it bonds, be it equity, but at the same time you're also excluding a very big portion of people who are already in this space. So I think, you know, you spoke something like a hybrid model. I think that is actually something that I would love to talk more about.
Because when I look at the STO, I just want to finish up the STO conversation for a bit before I go into the hybrid model. The STO really is, in my opinion, taking the old world method of selling stocks and shares and partial ownership. Because when you talk about buying into a company, what are you buying? You're buying into control of the company, you're buying into the profits of the company, and you're buying into the asset of the company. So this is basically securities, right? And a lot of ICO companies, really, this is the way to make money. But because they are sanctioned by SEC and they really cannot call themselves securities, so they've shoehorned their utility token in such a way to hide it from to disguise it as a security token. But the truth is, as long as you touch any of these three, and so many companies, ICOs, have done it under the guise of utility, they're effectively a security token. So now, with that in mind, STO does not serve to help these past companies get in line. It's just going to be a slap, here you are fine, and that's going to scare away new innovations and new ideas. And what happens now is you're going to get a whole plethora of projects coming in who are already possibly rich on their own, having all the finances, having all the infrastructure. We're talking about property companies, talking about maybe say actual gold-backed security tokens. And then it's going to be a very small pool again. However, when they talk about the STO, the security token offering, I believe what's really going to happen is existing company, existing infrastructure going onto the blockchain. Because to own a certificate, to go through the legal paperwork, to get all that done is a nightmare, right? And a lot of middlemen, the lawyers especially, earn a lot of money doing this. So when the security token goes onto the blockchain, the people who will be really affected are this bunch of old school lawyers. But at the same time, you're going to get new school lawyers who are going to be tuned to, or rather priming to be in a position where they are now the de facto authority to help you get onto the STO correctly. And again, this is not decentralized. This is still SEC. This is still authority. This is still needing the middleman. So if you look at the philosophy of blockchain, it's trying to decentralize, trying to have peer-to-peer. And when you have STO, to me, that is just old guys using blockchain. That's not really using the philosophy of the blockchain.
With STOs, all peer-to-peer dies. Why? Because in order for you to actually buy a STO token, for example, it is coded in the smart contract that only certain groups of people can buy it. You have to reach a certain tier of accreditation in order to buy it. You must be from a certain exchange that has actually verified you as an accredited investors before they can actually trade the tokens to you. There's a kind of stringency you're looking at. So, all these things are actually very huge barriers for common people.
But that being said, if you're an old school business and you want to be able to use this new STO to tap onto a liquidity market, do it. I'm not saying this is bad for you. But what I'm saying is, STO will not replace ICO. I really don't think it will replace ICO. Now, on the topic of ICO, this is where you ask me. I'm thinking the DAO method. The DAO was something that people don't talk about these days, but it was really hot back in 2012, 2016. In fact, the DAO was actually, it started off in 2009, in fact, by a small group of people who really believe in the power of decentralization and that the entire rules of an organization doesn't have to be on the shoulders of one man of the leadership position.
The CEO or any of the CEOs.
Yeah, you can decentralize that control to every participating people in the organization using the, what does it stand for? DAO, decentralized autonomous organization methodology. So everyone holds the DAO token, they make a vote, and it's basically harnessing the wisdom of the crowd. Now, I like that idea. The problem with ICO, there was no wisdom of the crowd. There was the greed of the crowd, right? But now we're looking at 2018, we have a lot of people coming out. We have people like Cointelligence, ICO Ratings, ICO Bench, already upping their game, trying to do good for the community. People like us, various other influencers as well. We have now a certain level of knowledge and responsibility to the community. If we try to adopt the DAO method again, barring all the securities and the coding flaws, using the DAO method and combining that with the ICO fundraise methodology, you don't really need to depend on regulators to tell you what's right and wrong, because the wisdom of the crowd will thrive over stupid and foolish projects.
So only like if the people or the investors actually agree, say, hey, I think you guys have reached a milestone that requires you more funding, or we understand your situation, then let's vote on whether we should move forward.
Correct. And if a company starts to buy Lambos and everything, then you're not going to get the rest of the tranche, right? The crowd is going to vote against you. So you like the DAO, right?
Actually, I did a research on dual tokens, and one project I came into is actually they fundraised in 2015 and through the DAO methodology, and actually it works. And now they benefit from the from using the funds that they raised in 2015.
No, but I do totally agree about the fund, like locking up the funds and making sure that there's proper, you give the funds when you need it. I think that has been doing very well for DJs. They have been very, 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 how to say, frugal with their spending, because they know that they cannot just, we have X amount of money, let's just
the minute you are going to be accountable to somebody, you will start to take
Yeah,
care
so
of things.
I think it's fantastic.
When you're given a large sum of money as a startup founder, that's when really it just goes to your head. And we have seen that in the dot-com era as well, right? You know, all those companies raising so much money, and what do? They buy Herman Miller shares, right? Then 3 months later, the company closed down. So whatever they were facing now is really not unique. But what's unique is the way we are able to move forward with the technology, which is the blockchain technology. Now, putting aside STO, we know that we need to go beyond ICO. A good friend of mine, David Kim, all right, I spoke with him this morning, and he mentioned something that he has not seen in the community before. It's called digital shares token.
Okay.
Or digital shares offering. So it's also to offer shares of the company using preferential shares, which is a thing right now. Any one of us can have a startup, a private limited company, offer preferential shares to investors that we know to want to come in, and we run our business. They don't really have any voting rights, but they can cash in and out anytime.
Okay.
So to put that digital shares or preferential shares on the smart contract and offer it out as a token. And because it's non-fungible, we have non-fungible tokens that you can actually see your cert in your phone.
Serialized and
It's like instead of giving you a certificate and says here is your stock options, your little cert, you're actually now putting it in a digital format on the blockchain and giving it to somebody. So to me, now this solves that middle ground between going all out IPO level, which is the STO, and also the unregulated ICO. So having perhaps the DAO method, which is a consensus method for everyone, plus a preferential shares method that is tokenized. Now this too seems to be, in my opinion, a very good solution to the community to think about. Instead of everyone out there just jumping the gun and saying, oh, SEO is dead, just go STO. And you'd be surprised, it's not. You would think that is a very immature, very naive thought of if not one or the other, but a lot of people are now just calling out for blood because, you know, monkey see, monkey do, just follow the crowd, right? The mob mentality. But what I want you guys to think about and take away from this video is, can this DSO, which is a digital shares offering with the DAO mechanism, be that middle ground that we are looking for? And no one's talking about that.
But do you have to be a accredited investor to buy these shares?
No. That's the beauty of preferential shares.
Asset backed.
It's preferential shares of the company. Think of it as if you're buying future vouchers of the company.
Okay.
Like you trust the company enough, the company sells you its shares, it can possibly make money or not, but you're buying that ticket.
But
and
isn't
you
that
don't have
like
to
a
be
dividend when they start to like make money? And then they start to want to pay back their investors for believing in them.
Yes and no. If you go down to the terms like dividends and paying back, that's going to run afoul of the law. However, the laws that I know in Singapore right now is you run a company, you can offer preferential shares up to 50 investors to a tune of $5 million.
Okay.
Yeah. So there is a limit. So like what you said, a lot of projects raise hundreds of millions, which you really don't need. Frankly, if your startup that needs 100 million, I'm not going to buy that, right? But 5 million, I can believe in that. Yeah. So we are finding a lot of, the topic of this conversation is we don't want STO to kill innovation, right? We want innovation to flourish, but within rational sense. We also don't want to put too many regulations because that stifles creativity and people just, after a while, they can't be asked to do it because it's too high barrier to entry. But now if you allow innovation to flourish with the caveat that the community who is backing you up now has the right say to when you can put your money in, hand to the money and pick the investments or what to buy or what to use the money. Now there's that wisdom portion, the consensus portion. There's also the digitalization of the shares portion. So you're not just buying into a utility play that has no value. You're literally buying into a part of the company, but there is a cap. So now I think that seems to solve a lot of problem for the market today. But what I'm concerned is, why isn't anyone talking about that? Is this something that's new?
Yeah. So, okay, because if you look at ICO, why it became so vicious is because too much money raised, no intrinsic value. So there isn't any underwriting company to tell the investors how much this company should raise. And investors, they're not foolish, they know. Everybody start to pump in the money because it's like just a money game. I'm first to go in, I'm not the last to come out, I'll get my gains.
Yeah.
So who will be losing are those people that falling behind the queue. So these people will take the losses. So finance is very easy. One people earns, the other guy lost the money. So it's just like a money game that we see in the market. So it's as vicious as the money game. So what we can actually bring faith back to ICO is actually limiting the funds that company can raise through Trump smart contract mechanism, escrows, and also distribute the funds in tranches according to that roadmap. And of course, we need a company that can somehow underwrite this investment and tell them, okay, how much it's actually worth and how is their business plan. Yeah. So if all these are in place, I think ICO is still a very good
viable
very
option, right?
very good option.
I think then when companies they need extra money, but maybe it's before their actual roadmap, they can actually write a paper or write some justifications why they need the money.
Yeah.
Then at least people can vote and say, okay, we understand your plight. It is something that's unforeseen. Here, we give you the permission to actually draw out the money. For DAO, I think DAO is a fantastic idea, but to me, DAO only works if the people who actually vote are registered, because you need to be able to know that these people are actual people, but actual investors who actually have skin in the game, who are part of the ecosystem. Because the whole concept of crypto is all about anonymity, and you don't really know who is holding what tokens, or it could be the parent company holding the bulk of the tokens but distributed to 10 different accounts, and they are basically voting for themselves, right? So I think in order for a DAO to work very well, it's like how a lot of countries are looking at blockchain as a way to do voting. You have to register the person, and one person can have a maximum of only, like, for example, a weighted of 10. You can only have 10 of these tokens, and these tokens should not even be a tradable token. It should be given to people after they have actually invested in whatever. They say, okay, we recognize you as an investor of X amount of quantity. Here is 3 DAO tokens. This means that your vote is counted as your one vote is weighted 3. And then of course bigger boys get to vote for more things. But at the end of the day, you need to know who your voters are. Because if they are anonymous, it's going to be extremely hard to know whether things are being played fairly. It could be like behind the scenes.
And this is also the reason why SEC is so particular about knowing your customer, anti-money laundering laws, because really you don't want to be the unwitting victim of funding terrorism or getting bad players come in and having your rivals in other business coming in, take all your DAO tokens and then
voting against you.
So I think that portion where anonymity versus you're knowing your customer, again, that's a debate that we're going to have. Like, what is the weight of being anonymous? But my question is, for people who are so secretive about their identity, and probably this is more for the American side of life, where their security is very important to them.
And they want Big Brother to watch their reaction.
Yeah, but the question is, does that anonymity help you, if you have nothing to hide, or really, make things harder or cause more trouble and have that veil where people who have bad intentions hide under?
I think now, being anonymous is you have a lot of cons to it. Like we talk about investment, but I think when crypto first started, it was the key defining feature of cryptocurrencies is really to get away from the scrutiny, as well as the eyes from the governments and the Big Brother that's always watching. And that's why crypto has always been very well known for a currency that is used to do things that are not so legal. Like Silk Road. I mean, these are all this is not coincidence, being able to buy something anonymously leads people to usually buy things that they won't want to purchase with their Visa or MasterCard, right? They want to see on their statement, like visiting some drug place, But then now when it comes to a little bit more real world, and then now we are getting into all these like ICO games and trying to help innovation, it becomes a little bit. You have to find the balance.
So you're always going to have the dark side of the net, right? You kind of hide away from the dark side of the net. There's always going to be there. I'm just saying that for legit business, you don't need to go and hold on to the value of anonymity that much, say for someone who's dealing with drugs.
Yeah.
And they have a whole different market for that.
I think if you want to be a crypto buyer or crypto holder, I think it's perfectly fine for you to cherish your anonymity and kind of like just do your own thing. But if you want to enter the real world investment and kind of take innovation and technology to the next level, you have to, be out there, right?
Yep.
You have to be part of the ecosystem. You can't just be a sideline guy. Because I think a lot of reasons why ICO managed to raise so much money is also because people didn't really want to be part of the company. They wanted to give their comments, they wanted to say hi on Telegram, but they didn't really want to be, burdened with all this voting and all this kind of being involved. And just okay, here's my money, take it. I know you'll do the right thing. Just make me tons of money and I'll be happy.
It was a fun game for people. Anyway, just to wrap off today, Radical Rock, do you have anything to say about this topic? If you want to rip STO apart, and I know you have done it in your report, go ahead.
Yeah, so conclusion is we should treat ICO separately from STO. If companies who wants to go into STO in a way to give more assurance to their investors, sure, no problem, they can structure whatever way they want according to regulations. But ICO is still helping the new startups, the new company, founders with doesn't have a lot of track records in their businesses to raise funds for their excellent ideas. So ICO is I should say
not dead.
extended version of
ICO 2.0. Okay.
Yeah, ICO is the extended version of Kickstarter, and
we just need to tweak it.
Yeah.
Need to tweak it a bit.
Yes.
Put in some new features to learn from the mistakes that we've made and kind of make it more holistic, make it better, right? Yeah.
So let me know what you guys think about having a DSO plus a DAO model, DSO digital shares offering, plus a DAO model combined to one. If you like that idea that I just talked about, give us a thumbs up. Share your friends, give us a comment, tell us, hey, you've not heard about this before, you heard it first here on Rock the Block Live. Thank you very much. And we just want to know if there are other ideas out there like that we have not found out. Do drop us a link in the line as well. We want to know you, get to know you, because we are all in this together to try to make the world a better place. All right. So that's all we have for you today on ICO versus STO versus possibly a new hybrid model. My name is Eugene.
my name is Radical Rock.
And Malcolm here.
Well, signing out. See you in the next video.
See you guys.